What's up, you guys? All right, well, here we are Tuesday morning, and I'm locking up $49,000 in profit. Not bad. This month, in July so far, I've been averaging $34,000 per day. I'm at $650,000, just over 650, right around 660 after today's profits. Today is a day where I'm above the average. The two stocks I focused on this morning were straight off the watch list: KODK and FRAN. Those two, high volume, big gaps, both more than 100%. KODK was gapping up like 271%. Currently has 129 million shares of volume. It's very liquid. You can get in and out with big size, and that's exactly what I did. 25, 30,000 share positions. 25,000 shares with stocks like that's over $250,000 in the market. That's a lot of money that I'm putting out there. So the $49,000 in profit today is good, but of course it's relative to having the buying power to take some really big positions, and that carries risk. Now, for me, I've been conditioning myself to try to trade at the edge of my comfort zone with larger and larger positions, because I know there's people out there that trade with 50, 60, 70, 80,000 share positions. I know that there's people that do it. And I could afford to do it, but emotionally, I haven't been able to handle taking that type of share size. So I'm working my way up to bigger positions, knowing that when I trade with bigger positions, of course, the winners will be bigger, but the losers will be bigger as well. And you have to ask yourself, can you handle the loss? Everyone can handle the win. Everyone can handle the profit. But can you handle the loss and the risk that comes with trading a 40,000 share position and suddenly losing 50 cents a share, because that's 20,000 bucks, right? And that's the spot where, I'm trying to get more comfortable, and as I trade with larger size and I get more aggressive, hopefully I will find, that I am able to comfortably get up to 40 and 50,000 share positions when we have stocks like, KODX that are really high. And so today I stepped up to the plate, not as much as I could have, but again, it's just constantly trading at the edge of my comfort zone, knowing that the more I trade there, that eventually my comfort zone will start to get a little bit bigger, and I'll be able to trade, more comfortably at that level and then take it one more step further. So that's the goal in terms of me trying to develop my comfort zone and my growth as a trader. So I hope you guys did well today. We'll also talk a little bit about some of the swing trades that I have open, which are currently up $270 on the day. I feel like I might get stopped out of one of them here, but the other three are looking okay, and I'm trying to take a trade on Tesla, but I don't know if I'm gonna get filled on that. So anyways, that's where we're at. I hope you guys enjoyed the recap. Questions, comments, leave them down below, and I'll see you first thing tomorrow morning for Wednesday, wildcard day. Wednesdays have been the biggest green day of the week this year for me. So we'll see what I can do tomorrow. All right, see you guys first thing tomorrow morning. All right, everyone. So we're going to do our midday market recap here. We'll go over the trades from this morning. Today, for the most part, was a really solid day. I did have a couple of instances where I was a little kind of too aggressive in the wrong spot, and that wasn't ideal. I did have a couple of bigger losses and a couple of places where I gave into a little bit of FOMO, but finished in the morning with $49,331.43 of profit, with the bulk of the profit on the top two stocks that were on my watch list this morning, right? So KODK, KODK, and FRAN, these were the two that I was watching pre-market. They were the leading gappers in the entire US market today. KODK gapping up 271%. It currently has 123 million shares of volume, and FRAN gapping up 94% with 23 million shares of volume. So these have a lot of volume. It's very easy to get in and out. My biggest position today on KODK was 25,000 shares. A 25,000, actually, I might have had 30. I'd have to go back and check. But so let's say 30,000 shares, and that would have been, I had a big trade right here at about 10, and I had another pretty big trade right here around 11. So 30,000 shares of this stock at $11 is $330,000 in the trade. A 330,000 share day trade. That's $330,000 day trade. That's a lot of money. There's no question about it. And so for me to have a day like this, it takes a willingness to be pretty aggressive and to take, obviously a pretty big position. So I want you to be mindful of that these gains are certainly relative to risk tolerance, and that you shouldn't think that my profits here are typical or average of an average day trader. I have a willingness to be pretty aggressive. So if I had an account today with $350,000 in it, I would have been able to take pretty much every trade that I've taken this morning. And that would have been a fantastic return on that account of $49,000. So KODK, KODK, this was interesting because pre-market, it was already grinding higher. And we had this nice breakout pre-market right here over 905. That was a nice opportunity. And I actually took a trade on it pre-market right through that level. Whoops, let me pull this back up. So I started trading this one pre-market. And this was that really nice breakout there at 904, 905. Nice breakout. That's a flat top setup. So I took that trade right there, and we got the squeeze up to 926, a micro pullback, adding at 926, and then we got the squeeze up to 969, all the way up to 974. The bell rings, and it dips down just for a second right here. And on my first trade, I jumped in with 20,000 shares at the open at 67, and it flushes down to 47, and I stopped out with a $4,000 loss. 20 cents with 20,000 shares is a $4,000 loss. It then rips back up, and I got back in, again, this time with 20,000 shares again, and it rips up to 10, and I'm taking profit at 985, 990, 10. It goes all the way up to $10.80, and I felt really frustrated. It then dips down for a second, and I added on this dip right here at around 950. I added 20,000 shares right here on this dip, and then stopped out here again for another $4,000 loss. So lost $4,000 here, made back $4,000 here, and then lost $4,000 right here on this drop. So I felt frustrated that I had a nice trade right here, but then sold it too soon, and then got back in and stopped out a second time. So that was where I started to feel a little frustrated. It sold off here, sold off. I kept trading in this area, and I was up at my peak about $19,000 on the day on the trades that I had taken, and I dipped down to being up only about 12,000. And I was like, all right, I've given back a little bit, maybe too much profit here. I have to be careful. Let's see what the market has in store for me. And I was giving back profit in this area here as it was doing these false breakouts right here and then going lower. And then it comes back up and it does another false breakout right here, which I took the trade and had a small loss. And then it comes back up right here. And on this one, I got back in and I was really aggressive on my position, and it rips from 10 all the way up almost to 11. And that right there put me up over 30,000 on the day. It pulls back right here, micro pullback, and a pop up to a high of 1130. It then drops down, goes through this little consolidation, and then rips back up, as you can see, micro pullback right in this area for a move all the way up to 1183. And so that's through this area here. This area in here is where I made the bulk of my profit on KODK, but I did have still some profit, about 11,000 or 10,000 from earlier in here. Actually, no, it was only 6,000 because I was already up 5,000 on FRAN. So FRAN, this one was kind of interesting. We had, kind of an interesting opportunity on this. So let's go back here. This gave a dip trade off of 950, which I took pre-market. And so right here, it was bounced off support, came up. Then it comes back down here and double bottoms at the low. So I actually bought 15,000 shares of this stock right down here. It then squeezes up, and I added to 20,000 shares of this for the break of 10. And it squeezes up to 10.25. I took some profit off the table around 10.10. It then dips down to 10. I added on the dip, and it flushes lower. I stopped out of the rest, but I made $5,000 on that trade right there. It then pulls back as you can see, at the open, it sells off, goes lower. And then as it broke the volume weighted average price right here, I got back in. So I got back in right here for the break of 842, which was the volume weighted average price. That was a little bit of an extended entry, and I was aware of that. But I also thought that if I waited for it, I would miss it. So we had kind of a pop here up to 29, and that was where I took my starter, this micro pullback here, to anticipate the breakthrough 42, and then added for the breakthrough the $0.50, added again up in the 70s. We hit a high of 84. Pulls back right here, I add, and I'm looking for the breakthrough through $9. It hits a high of 98, but there was a seller there at 9. It couldn't break that level, and so I took my profit out. It dips down, pulls back for a second, and then it curls back up. It took a long down here, first 1 minute candle to make a new high, and it pops back up all the way to 911 and then flushes back down. So in that move right there, I made about $9,000 from right here and right in here. Again, on this one with larger share size, but a nice trade there. The only stock that I'm actually red on is SQBG, which is a stock that was not on my watch list pre-market. It was on the gap scan, but I wasn't watching it. It squeezed up and got halted, and I bought it right here for the break of $8, and it squeezed into a halt at 842. It opened higher at 880. It dips down, and I bought it at 850 or added at 850. And then it flushes down, and I stopped out of the whole thing at like 820. So I don't know, wrong idea, I guess, on that one. Lost 2,000 on it, so that was kind of a bummer. But that's again, that's the way it sometimes goes. So overall, I would say my P&L today was pretty solid. The only area where I had a little bit of choppiness was on KODK right at the open, where I lost like $4,000 or whatever it was. So, I guess I was up, I don't remember, but I was up maybe 14,000, took a trade, was up 19, and then took another trade and lost 8,000 and was up only 12,000 or so, made back a little bit, and then gave back what I made. So, that was a little touch and go there for a second, and I was getting close to the spot where I was thinking to myself, I'm gonna have to walk away if I'm not able to if I'm not able to get myself back up towards 20,000, and if I drop below 10, because $10,000 is currently my daily goal. Now, if we look at the month of July, I am currently averaging $34,000 per day. Today is above the average, which is great. My average winners are 1,500. My average losers are 1,300, and that's because I had a day where I had two $20,000 losers back to back. That's the day I went up 50,000 to down 7,000 before finishing the day up like 21,000. Big numbers, those are certainly the result of trading with big share size. And ultimately, anyone can trade with big share size, but it's taken me almost 10 years of trading to get comfortable with the level of share size that I trade with right now. And it's simply the fact that you have to condition yourself to experience some extreme swings in your P&L without getting rattled, without getting fight or flight. Because I remember years ago when I would trade with a really big position, or right now if I took a 100,000 share position right now on KODK, on KODK, what would probably happen? My palms would get sweaty, my heart would start pounding, my eyes would dilate, I would be staring at the P&L, and I would just be like, I would just be sort of like a deer in the headlights, and I would be scared. I would struggle to make decisions because I'd be thinking, oh my God, if this flushes, I could lose $50,000 on this trade. If it pops up, I need to start taking profit off the table really quickly, because if it pops and does a false breakout, all of a sudden I could be up 30, 40 cents and then back to red. And so that would be very stressful. And that's probably the same experience that many of you would have right now if you traded with even 10,000 shares, or maybe even 5,000. So we all have a line in the sand where we're going to be outside our comfort zone. And so I have been an advocate of trying to trade at the edge of my comfort zone during periods when the market is hot, because that's how I expand my comfort zone, right? That's how I scale up my strategy to be more aggressive. But I will say that during a cold market, trading at the edge of my comfort zone is only going to increase the losses. It's really not a good idea for me to trade at the edge of my comfort zone when the market is really cold. It's just not going to work. And so during a cold market, even though I would like to be trading with 15 or 20,000 shares, I'm most likely just going to have to be content with trading with 5 or 8,000, because we're not seeing good follow through and the market is choppy and everything else. But conditioning yourself to be comfortable with larger share size is ultimately going to be important for being able to scale your strategy. It's not going to be for everyone, and there's certainly limits in terms of account size and things like that. But in any case, so this is where I'm sitting here on my day trades, $49,300. My swing trades today, I'm down $36 on, $26 on. I am kind of a little bummed out on my Etsy trade yesterday. As you might recall, I on my 114 call spread that I sold, I was up 300 when we did the recap, and then yesterday Etsy had a really strong day, and I stopped out of the position break even. So, and then I decided to flip my bias and sell the 100 strike puts, thinking that, all right, this is looking strong. I know it's coming up into earnings next week, so maybe I should flip the bias to the long side and look for it to break over 108.71. So I did that, but now I'm down $430 on the flip back to the long side. And that was selling the 100 puts at 71 cents. They're at $1.13 right now. So, on something like this, the idea is that those expire at the end of this week, and as long as the stock closes above $100 by the end of the week, those will expire worthless. But I haven't had much of an opportunity to benefit from time decay. And now, look, it's down. What's it down today? It's down 2.5% today. So, and coming back down towards the lows. So this is kind of annoying. I'm sort of getting chopped out on this stock. I'm not really doing super well with my swing trades on it. And maybe, I don't know. I don't know if I should just cut the loss and come back to it another time, or if I should give it a little bit more room, but I don't want to let the loss get really big. So the low of day on this is $103. The overall market is also gapping down a little bit, but is at least holding above the volume weighted average price. So possibly on this, I'll say that I'll stop out with like a $500 or $600 loss and just keep the loss small. I mean, ultimately keeping losses small is important. And the challenge is, at the end of the week, if this does close over 100, then I will maybe say, you know what? I was over managing it. I should have just set it, forget it, and walked away. But, now, I might have had to hold down $1,000, and I might as well just keep the losses really small. So I'll sort of try to draw the line in the sand there at 500, and if it does go lower, then maybe I'm just wrong about this. I felt kind of like Tesla was going to continue yesterday into today. Tesla, I was thinking about a swing trade on it, and what I was thinking about doing on Tesla was selling shorting the calls, basically. And I was like, okay, it's really strong. It's going to go higher. I'm going to short the calls because I think they're going to come back down as it fades. But then it gapped down overnight, and so now I feel like I'd be chasing it. It's not a good entry anymore. Netflix, I am holding, and I'm up just a little bit on that. But I sold the 465 puts at $1.13. 5 of them, 5 contracts, and they're at $1.05 right now. So as long as this closes above 465 by the end of the week, I will keep that money in my pocket. It will expire, those will expire worthless. The S&P, I'm still in good shape on this. SPX, I'm in good shape on that. So these are bullish trades, hoping the market stays above 300. This is a bullish trade, hoping the market stays above, or Netflix stays above 465. And this is a bullish trade, hoping Etsy stays above $100 a share. But I do need, I do need that to cooperate. And this is maybe not the best stock to be trading. I had some trades on it from the last couple of weeks that were profitable, but then I had a couple that were losers. I've seen the CEO on the news and stuff, and they were talking about how the level of sales they're seeing right now is like Cyber Monday, Black Friday, except during right now. So I feel like they're going to continue to move higher, but into earnings, but maybe I'm wrong on that. So again, it's a technical setup. The break of 108.62-ish would kind of lead towards a move back to 115, which is what I was thinking. So selling the 100 puts I thought was a pretty safe trade, but then it's pulled back a little here. So again, we'll see. If it can close back up above 105 or so, I'll feel more in the driver's seat coming into the day, or finishing the day, going into tomorrow. But we'll see. So one of the things that I kind of like about, so swing trading is obviously, I think, more difficult. I've heard people say swing trading is easier than day trading, but that's probably the stupidest thing I've ever heard, because it's not. Day trading is much easier. It's much easier, in my opinion, to predict what a stock will do over the course of 5 or 10 minutes than what it's going to do over the course of 5 or 10 days. What a stock's going to do over 3, 4, 5 days is so much more speculative, and you're so vulnerable to overall market conditions. So my last trade on Etsy, or one of the last ones, I sold the $109 strike puts right here, and on that day, all of a sudden, look at this big drop. So how would I possibly know that was going to happen? Well, the overall market on that same day had, was it this big drop or this one? It was this big drop right here. So the overall market tanked, and guess what? The stocks dropped with it. So that's a big variable that you are just sort of at the whim of. And so I find that trading stock for swing trading is difficult, because you have to predict sort of these exact entry points, and you're then subject to the whim of the overall market. And so from the swing trading perspective, I think the options potentially are going to be a little easier to be profitable, although they are more difficult to learn. So the barrier to entry for a beginner trader is higher. But I think that if you're willing to get through that barrier of entry, you could potentially do a little bit better. So like on the S&P 500, the trade that I have right now down here, I sold the $300 puts for 60 cents. That's $600 of profit in my pocket. So what I sold was the contract to buy 1,000 shares of the S&P 500 at $300. Now, as you can see, the S&P 500 is not at $300. It's at $322. Why would someone have bought that contract from me? Well, someone might have bought that speculative contract thinking that, if the market drops down, then I'll sell that. Resell the contract for a profit. Maybe it was a speculative trade. Maybe someone took that trade thinking that they're hedging a long position that they have, so they're long the stock, but then they also buy some puts just to kind of cover themselves, in the event that the market does drop really quickly. But in any case, someone was willing to pay me $600 for that. Now, if the market closes above 300 by next Friday, August 7th, then that contract that someone paid me $600 for expires worthless, because no one's going to execute a contract to sell me 1,000 shares at 300 when the current price is 322, right? They're just going to sell it on the open market. So in this instance right here, selling that contract I get to keep the $600 in my profit. Now, in my pocket as profit. Now, if the market does drop to 300, I have two choices. One, I could simply cover the position for a loss. So as it goes up to 70, 80, 90 cents, $1, $1.20, $1.30, like what's happening with this Etsy trade, I could just say, I'm just going to cover this for a loss. I'm going to create the closing order and close it and take a $300 loss. Alternatively, I could keep holding in hopes that maybe it drops down, but that before expiration, the market does get above this price. And as long as it gets above that price by expiration, then it'll expire worthless and I'll get to keep the money from the premium that I sold. And if it closes below 300, then I could get assigned 1,000 shares of the stock. So that contract, that person could execute it, and just like that, I'm assigned 1,000 shares of the stock. And then I've got a situation where I either have to sell that 1,000 shares for a loss if the market keeps going down, or I could sell it for a profit, or I could sell covered calls against it, or whatever. There's a lot of different things I could do, but the advantage of selling with a strike price so far away is that the likelihood of it getting executed is fairly low. So like last week I sold a position on Tesla. I sold the 1,800 calls. Now the 1,800 calls, when I sold it, were $250 away from the current price. So I thought the likelihood that it closes above 1,800 was very, very low. Those expired worthless and I kept the money. Right now, I could say Tesla 1,700 calls might look equally attractive. So let's look at those for a second. So I'm going to go to Tesla. So let's do the weekly. They expire at the end of this week. So 1,700 calls right now are trading. It's kind of incredible. They're trading at $6.95 by $7. So people are actually paying a lot of money. There's a lot of premium on those 1,700 calls. Seems kind of crazy, but people are paying a lot for them. So I could go ahead and sell this. But if I did that, what would happen is, number one, I'm not allowed to do it. But the max loss is infinite, and that's unacceptable. That's not acceptable to have a max loss that's infinite. So what I would do is I would sell the 1,700, and then I would buy the 1,710. So that by itself puts a little max loss on it. So now my max loss is $9,300. My max profit's only $670. So you don't get a lot of money for taking this trade, right? Your profit loss ratio is not that great, but what are the odds that it's going to come back up to 1,700? And so that's the trade that you get to make, and you get to speculate a little bit. You could do it the other way. You could say, well, what are the odds that it's going to break below 1369? Right? So you could say, all right, well, 1369, let's go back the other way. So 1370. So I could sell this one and then buy this one. So very similar. So actually this one you get better odds for. So you're getting better odds for this trade because the market is pricing that there's a higher likelihood that it's going to go this way than that way. You get better odds the more risk you take. So if I took a lot of risk and said, I think by the end of the week it's going to close, above 1,500, look at the odds on this. They're great, 1-to-1, but it's like 50-50. So the risk is a lot higher. Now, the further out of the money you go, heck, I could say, well, let's go back to 1,800. What are the odds really that's going to go back to 1,800 by the end of this week? Pretty low. So I could sell these right now for $282. If I sell 10 contracts right now, I would net $2,720 of profit. But I'm on the hook to buy them back. So that's 1,800. There's 5,000 contracts of volume. And then I could say, all right, well, maybe the problem is the bid here is 273. The ask here is 275. But if I got a midpoint trade, then I could make $240. My max loss is 10,000. Now the fact is, probably 99 out of 100 trades that you take that are that far kind of out of the money, you're probably going to close them for a winner. They'll probably expire worthless. The odds of this going to 1,800 by the end of this week, short of, Warren Buffett buying a Tesla and saying he's all in on Tesla, it's the odds are pretty low. So again, you don't get good ROI when you take the really sort of poor odds type of position, but you can, you can make a little money on the side. It just uses some buying power and just gives you a chance to, make a little bit sort of passively without having to focus too much on the trade. And that's kind of the idea with swing trading for me. So I think that's a little bit easier because you can take these trades that are way sort of far unlikely and then just set it and let time decay work in your favor. So as each day goes by, those positions are worth a little bit less, a little bit less, a little bit less, because part of the value of the premium is in the time, the amount of time you have. So anyways, I'm not sure at the moment. One of the things that can be a little tricky is just the position of the overall market and everything else. I do feel better about the Tesla trade. The S&P is coming back down. Etsy is probably also coming back down a little bit. So that one's kind of tricky. Tesla is sort of back at the volume weighted average price. I mean, I could see it coming back up to 1,700 by the end of the week. I could kind of see that happening. All the way to 1,800 I think is kind of unlikely. I could put an order on this at, $2.24-25, and we'll see maybe if I could get filled. I mean, it's actually moving around quite a bit. Now it's at 250 by 249. So even just in the last few minutes, it dropped down a bit. And it was probably as high as maybe $3. But either way, it's the difference between these two. So, and I could go out one more, but with a little bit more profit, it's going to come more risk. So that's not really, I don't really want to do that. This one's only 18 cents right now. So, the odds there, they're not great, but the likelihood is that I'll just keep that money in my pocket. I would like to get it a little higher than that. I mean, like $500 would be nice. So to get to 500, I would have to probably go a little closer to in the money. Even this one's only 300. So yeah, these ones, I mean, I'd really have to come down, even down to 1,700 was $650. So I'll keep an eye on this and see maybe if it comes up a little bit higher today, if there's a chance to get maybe a better entry. But anyway, so that's where I'm sitting right now on the day. And hopefully we continue to see some good opportunities going into the rest of the week, Wednesday, Thursday, Friday. I crossed over $650,000 gross profit on the month today, which is great. And next stop, 700 grand. So we'll see if we have 3 more really good days. I could easily add another $100,000 in profit. So 750,000 might be within reach here. So maybe I'll kind of go for that and see what we can do. All right, and to answer that question, these are all spreads except for the S&P 500 and Etsy. These two are spreads though, because actually no, Netflix isn't a spread. So I can do cash secured puts. So I have the cash to do it, and ultimately, again, as long as the strike price is well out of the money, I'm going to make more money doing that. Whenever I do a spread, it just limits the profit by a lot. It reduces your risk as well, but both sides of the spread kind of move sort of in tandem. It takes a while for one to really kind of catch up over the other. You're just kind of like, they might both change in value, but in sort of equal amounts because they're, a strike apart. So it just takes a little bit of time. All right, so anyways, that's it for me. I hope you guys enjoyed the recap, and we're gonna do some Q&A here for Warrior Pro students.
Oh, hey, I didn't see you there. Help us hit 750,000 subscribers by hitting that subscribe button, and stay tuned and check out some of my other awesome uploads right here on YouTube.